Now, this is interesting from yesterday. We had New York opened here and pushed up. I thought it was going to be pushing up to this area, but it didn't. It stopped here, and you can see it with these future push-ups. Price stopped and came down. Now we've got price going back. This could be a draw on price into this area. Well, I'm just going to wait now and see what happens. If price does come up into here, I'll get back. I'll put the video going again when we're back into this area. Oh, yeah, Frankfurt's just opened and price is starting to drop. It's dropping short of the inefficient area that I had marked up, but price will do what it will do. It might well be a false breakdown, get people in short and then pop up, especially around the 27,800 area. That's the 800 can be interesting for institutions to build orders. I think I'll just wait and see what happens. But I mean, basically what I do to enter trades, I just mark off the top, the high, and then I'm looking at microstructure. Now in theory I'm looking at price to come back into here and then see what the price action's like to go short. I mean, price is starting to pop back up, but like I say, this could be a false break, draw people in short and then push it up into this zone before going short. I'll keep the video running and we'll see what happens. And this yesterday, this was New York opening on this candle. The price was dropping. You can see we've had 1, 2, 3, 4, 5, 6 red candles in a row. New York opens, pushes price up. Like I said before, I thought price was going to come up and test this area and then drop off from there. I was even going long in here somewhere to go back up to this level, and of course price did what price was going to do, and you see it created the wick on this candle here on the New York Open 15-minute candle, and that was the sell-off in New York. And of course I'd already had a winning trade in here somewhere coming down, so I wasn't really that interested in getting involved. Well, I would have been if I could have found a good setup, but it just didn't happen. And what I'm finding is I'm far better with trading in the morning than I'm an early morning person. That I'm better off finding setups in the morning, like at this time through until 10, 11 o'clock UK time, and then leaving it, coming back around New York Open and see if anything else is going on. But right now we've got price, it's moved back up into here. I don't know. It's one of them. It's judging the entries is the thing that I find most difficult, because my stop and take profit are all predefined. A 10 pip stop loss, a 20 pip target. It's just focusing on the entry. Now we've got price moving down. I mean, it could pop from here. I mean, the move up has been so inefficient that we could see price drawing back at least to this area. See the inefficiencies in here. The price could well come back, fill this gap, and do whatever it's going to do. I think I'm going to look at taking an entry on this. What I want to see now, ideally, would be price coming back to there. Maybe a little bit more. That's me short at 65.9. Right, so that's me short at 127.65.9. Right there. So, we'll see. Now it's just a matter of keeping an eye on price. Because like I said, you can see there's inefficiencies here. I mean, you look on the 15-minute chart, and there's inefficiencies running all the way up here. So now price has moved down. And we've got this level of microstructure. So price might well come back into here and then hopefully turn around and start dropping again. Because what you find is every time price drops through, makes a low, it will bleed back in to fill the inefficiency and the gap left to the point of breakout. So then it drops, works its way back and tests. So we'll see. There we go. Of course, what I struggle to find is an entry where price just runs in my direction. It happens very rarely for me, and a lot of my trades ends up coming back to break even. I'm even thinking of going for 10 pips on some of these runs, because it's very, very rarely that you'll get price, you'll time it just right to hit it when it's running. See, now price is drawing back. See these 3 bullish candles. Now in theory it should be pulling back into one of these and then turning around again. That's if price wants to drop at the moment. Like I said, it might well spring up, draw a lot of, like me, short traders in, and then put price back through. I mean, that 80 area was the initial target I had for selling, because I like 80s, I like 50s, and I like 20s, and of course the round numbers. Because institutions tend to build their orders around those numbers, like the 28, the round number, the 20, the 80, the 50, the 20. You can see this was built around the 20, and then of course you've got the round number. Yeah, this is a price just isn't, might pop. I like to see it pop, but see, now price has got to work its way through this level. I'm suspecting once it gets below here, we could see a faster move down to fill this inefficiency in, and then it'll hang around again. But who knows? It's all guesswork. I mean, you've got people who speculate, they know what moves the market. I haven't got a clue. I speculate. Like I say, it's been following Chris Laurie as being the inspiration for my trading, and it was one of his videos where he was describing when price breaks through a level, it will come back and test it and then go again, drop through, come back, test it, drop through, come back. That was a light bulb moment for me. Now look, we've got price coming back. And of course a lot of people just see all of this as noise, but it's the micro moves in the market. See now on the 15-minute chart, see with our price breakthrough, now it could well come back and test this level. These are always interesting when price is moving up like this. The close of this candle, the high of this candle, the low of this candle, there are efficiencies in here that draw price, and you can see it here. See, there's the low, and there's inefficiencies in here, and price, you know, price isn't just going to run right through. It needs to keep bouncing around and finding, I take it, pockets of liquidity, and just draw back, find a bit more liquidity, pop through. Price, you know, doesn't just move in one continuous line, it is continually looping. Anyway, let's take a screenshot. Take that for Forex Factory, eh? See, I like to be coming to exit a trade before a swing low. You see, at the moment, we've got this swing point here. But I need price to start popping. Yeah, it'd be nice to see price pop through here and there. I certainly don't want to see price get above this level now. If price starts breaking above here, then I'm going to be starting to look at exiting, because I need to see a pop through to make another low. And of course, with it being the last trading day of the year, volumes might be low. And again, price might get stuck here and have to pop up into here to find the liquidity it needs to continue its journey down. You know, we don't know. You just got to follow price. Like now, like I said, I need price to pop through here, make a new low. Until that happens, then I might well be getting out at break even. What is it? 7:22. So it's 38 minutes, 37 minutes, and London will be opening. You see, price breaks down, comes back, fills in some of the inefficiencies, and we hope for the pop. Come on, price. Come on in, pop. Oh, a bit of momentum there. See these lines, it's only 5 pips. See my take profit level sort of aligns with the minus swing point here. What I'm going to do is I'll keep the video running, and I'll come back when things when something interesting happens. Yeah, that's what I like to see price do. Now it's popping. So, like I say, it's just now a matter of price. It's whatever areas of difficulty. If there's some bullish liquidity on this side somewhere that just brings price up, and quite often you'll see here we've got inefficiency and price. It's just 2 1-minute candles, but price could well now draw back into this area, and there again it might not. Price does what price does. We can, at best, we're anticipating price. But all I'm doing really, I'm just looking at, I'm not, all I've looked at this morning was yesterday's price action. I just marked the low, the high, and this area, which I saw being interesting because it wasn't filled yesterday. And I was looking for price to come back. Like I said, the 80 area would have been an ideal spot to go short, but it didn't reach there. So you've got to go with what you're given. And like I say, you can see price pops down. Anybody long still in here are now trapped. You see price comes back to here and doesn't get back up here. So anybody that was long, getting in long late, which I don't understand why anybody would do that anyway, although I have done it myself. And then price drops off, leaving late buyers trapped. So now, of course, we're supposed to be looking at draws on liquidity, which, how do we know where liquidity is? I mean, you know, if you follow the so-called gurus, we'd be targeting down here, finding liquidity underneath these lows. But how do you know it's those lows? It might be these lows. It might be down here. We don't know where it's going to be. You know, the first sign of price, like yesterday at this high, price reached this high. You're not going to see if you're waiting for this, you're going to be late to getting in. And there was no pullback into here. And you know, if you look right, see what price could have reacted here, over here somewhere. Who knows? Nobody knows. But people like here, I put in a couple of levels. Why? I mean, price might reach there, might well react from it. But the first place you're going to see price react is off the lower time frames. Like there yesterday. You can see right through the Asian session yesterday, price was rising. That's why I was looking at getting in long in here. If price is going up, buy. If price is coming down, sell. And here we had, how many candles do we have? Green. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 candles long. That's not sustainable. So, you know, I was waiting for price to get into this area. This coincided. Where is it? There. There's the Frankfurt Open at 7 o'clock UK. Price was driven down, came back. But if you're going to see price reacting, you see it on the lower time frames. I mean, you see it was within this New York high yesterday is where price reacted. But how do you know which bit of this price is going to react from? Because I don't know. You could go to the just to the wick, and that would have worked really well. Look, to the wick, and price reacted off of that. But you can see it. You know, you anticipate where you're going to see some kind of reaction, and then when price gets there, you see it on the lower time frames. And where are we now? Yeah, see, now we're getting down close to 50, the half number. And again, there's orders placed around these half numbers. No, we might even see a run up to here, because we've still got this inefficiency here. You see, this is where I'd find, this is where I suffer with the psychological side of trading, because once I put my take profit in, I find it very hard to manually exit. It's like the stop. I'll bring the stop down to break even, and plus 1 or 2 pips. But like yesterday, when price was, when I was jumping out of trades here before they hit my target, I could see it. You can see it in the price action. And to be able to see stuff like that, it only comes with experience of watching the charts, watching price. There's no alternative to it. Because it really frustrates me when there are people posting charts on or videos on YouTube, trading videos, and they're just trying to draw people in, and it's just complete bullshit. I mean, there was a thread on Forex Factory that I was posting on, where somebody who's coding indicators goes and finds these videos, finds something's promising, and then will go and code an indicator to follow the strategy or the method that she's seeing on YouTube that looks promising. I mean, if people just, if you want to learn to trade, you've got to want to trade. It's no good thinking you're going to watch a video and suddenly become a trader. You've got to actually love the process of trading, which I do. Because I don't know if anybody's noticed or not, but I am slightly on the spectrum. Once I get obsessive about something, I've got to see it through. I mean, I started trading. I mean, when I think about it, I started posting on Forex Factory 13 years ago now. And I started trading, I think the first time I got into trading was back in 2009, around the summer of 2009. And I bought it was a PDF thing with a system written out on that, and it became very popular because it did have some success. And all that was, I think it was a 40 EMA, and you looked at what price was doing in relation to that EMA at London Open, and you either went long or short as relating to that 40, as to the slope on the 40 EMA. And there were forums set up. I was actually on a forum that was running this system, and of course it worked for a while, and people were tweaking it, trying to make it work better. It was, oh man, it was a joke. and then of course it failed, so everybody jumped ship, and no one would. It was then I realised if I was going to trade, I would have to actually learn how to trade, and not just trade the slope of a 40 EMA. Anyway, yeah, so we're reacting again off around the 50. Hopefully this little shelf here will hold price. I'm hoping that will kick price down. Like I said, we're getting close to the swing point on this swing point. Just a bit more momentum, that's what I need, another pop. See, when price was going up, look, I was working through this area, look, you had this inefficiency, then price popped back right into this area here. You know, this isn't noise. You get the same thing on a 1 minute chart as you would on a 4 hour or a daily chart. You'll see this. Come on. What did I go in at? 45.9. But another 4 pips. Come on. But this is why I love trading. You know, I love the, I don't know, it's the thought process. There's got to be some thought go into it. I mean, I'm a very practical person. I'm a builder by trade. I build things. So I'm very practical. And, you know, with that, you know, it's practical, but you've got to have some mathematical skills, etc. It's not all, you've got to use some brain work, but this is all it's you just against the chart, trying to find where it's going to go down, trying to find where it's going to go up. Come on then, I need to see a pop through that minor swing point there. Because what I've got to do now with this video, once my target gets hit, fingers crossed, I'm going to have to edit this video. And of course, I've got all this stuff working with the help of my son, because I'm an old git now, and technology just goes over my head. So I've had him helping me set the video software up, and now I've got a video editing suite to go and visit. So God knows how that's going to go. So, oh come on, let's have another pop down. I do believe, yeah, that's the target reached anyway. So, like I said, I'll stop the video now, get onto the video editing software and see if I can master that. But you can see you've just got to pick your levels, put in, I mean, I like to mark off the high, and then the macro structure at points, see price come through that, and then see price come back like we had here, and then get a reaction. And after that reaction, I like to see price draw back, like on that bearish candle there. I like to see price pull back. You see, I got in right on that candle, the green candle, as it was pulling back into the range of the bearish candle. And I mean, you look at that, there was maybe, I don't know what there was, very little drawdown on that. I mean, I wish every trade I entered actually went that well. Anyway, I'll leave it there and get back to you in the video editing.